This is your LMAX Exchange technical update for Friday, November 25th, 2016. Euro-dollar. So the euro is hovering just off that 2015 multi-year low at 104.63, and there's risk for a drop down to test that level with a break below to expose fresh downside towards potentially parity. At this point, look for any rallies to be very well capped ahead of 109. Sterling dollar. So cable is confined to a consolidation off the 31-year low down around 120, and overall the pressure remains on the downside while the market holds below previous base at 127.96. Dollar yen. Dollar yen has seen an impressive surge over the past several days, with the market trading all the way up to as high as just shy of 114 thus far. At this point, next key resistance comes in at 114.57, which is a high going all the way back to February of 2016. But daily studies are severely overextended at this point, and it wouldn't be impossible at all to see the market pull back for a healthy corrective decline, maybe back towards the 107.50 previous resistance now turned support area. Euro Swiss. So Euro Swiss has been locked in a more well-defined downtrend over the past several days after the market took out a key range that was defined between 108 and 110. At this point, the market is now favored to put in a lower top ahead of a resumption of declines towards a retest of the 2016 low at 106.24. Aussie dollar. So Aussie has seen a bit of a bounce in recent trade, but overall, given that latest break that we saw below 74.21, which is some key medium-term support, risks now are tilted to the downside with a lower top favored ahead of 76, ahead of the next downside extension towards next key support at 71.45. Dollar CAD. Dollar CAD has been trading higher over the past few months, and the market continues to look to trade higher with this uptrend, and a fresh higher low is now sought out ahead of the next major upside extension beyond recent highs that we saw at 135.90 about and towards the 140 area. Look for any setbacks in this market to be very well supported, ultimately ahead of 130. Kiwi dollar. So the New Zealand dollar has come under some intense pressure over the past few weeks. The market had recently put in a 2016 high going back to September at 74.86, but now looks to be carving out a top. A break below next key support at 69.52 will strengthen the bearish outlook and accelerate declines down towards the 65 area. SPX 500. The S&P 500 has broken to a fresh record high this week, taking out previous record highs just shy of 2200 from August, and this could open the door for fresh upside towards the 2250 to 2300 area. At the same time, if the market is unable to hold above 2200 and sees a sharp break back below 2100, this would suggest that there is a topping pattern in play, a potential double top in favor of the next major downside extension and potential shift in the structure towards the downside and more significant declines into the 1900 area. Gold. So gold has seen some major setbacks this week, with the market trading down now into some key medium-term internal support in the 1180 area. If the market takes out the 1180 area, which it already has, but establishes below, it could take us down to next key support down towards the 1130 area. If that level is broken, then the structure really shifts back to the downside, and we could see a retest of that meaningful base that we saw in 2015 down around the 1046 area. However, if the market can hold by the 1180 area and bounce, we could see a more formation of this longer term base and a resumption of gains back towards a retest of the 2016 highs. So with gold right now, we're kind of at a critical inflection point, and it will be interesting to see how things play out in the days ahead. It is worth noting that daily studies are highly oversold on the gold chart.